Hello, good morning. Week number 19 of the year. We are starting off from a week where US dollar did extremely well against a lot of currencies. Against Euro USD, it did actually not do a lot. So on the weekly, you can see USD is a little bit positive, mostly flat, but against pound, there was a lot of damage. One of the main reasons you see pound getting hammered against USD and a lot of other currencies as well. If you have a look at the yield spread divergence, it's extremely negative. We are expecting some more damage here, and it's a bit in a free fall mode until there is some damage control from the pound. One of the main reasons behind that is the Bank of England announced they're hiking rates, but they also see a minor recession coming up. So it's obviously not sending a lot of positive signals there, and hence you saw pounds getting sold quite a lot. But going ahead, we also have not a lot of positives going on for euro. So I'd like to show you the CFTC data. Most recently, CFTC data showed a flip in positioning for the euro pair that is coming not from long positions squaring, but from short positions adding. There's still a component where these long positions are misplaced by quite a lot. These long positions been adding since last year, November. So I've been personally tracking their positioning. So from last year, November, they added these positioning and they're right now in the deep red. So around these levels, and they're sitting about 500-600 pips in the minus. I really find it hard to believe that they're going to hold on for these positions for too long. Add to that, that Federal Reserve is tightening liquidity. Swap markets are pricing ever more premium, and that will be a drag on Euro USD. I'm not expecting a bottom until around these levels in the coming weeks and months. More or less the same for the pound. But moving on to some yen pairs, we still have big central bank divergence in all those yen pairs pretty much. Specifically, if you look at AUDJPY or if you look at USDJPY, there is some central bank divergence. So it's reasonable to assume, unless the Ministry of Finance or there's some coordinated attack to devalue all those other currencies and buy aggressively yen, there's nothing really stopping USDJPY from hitting the 135 level and AUDJPY crawling out of these consolidated levels and going higher. Again, keep in mind, we have an active central bank divergence here, and that is really driving the yen pairs higher. So if it continues, keep that in mind, that's what the drivers are. But into next week, we have only one economic data that I'm really interested in, and that is the CPI, US CPI to be exact. If you have a look at what happened in the past and what's happening now, the CPI month on month is last month printed at level. It has not printed, as far as I can see in my date, my data point ever before. So the last time it was as nearly as high as that at 1.2 was in October 2005. And it's really difficult to see that we're going to see a higher growth in the coming reading than the one before. If that is the case, and if you're going to see that the CPI month on month comes much lower than that, and we see a decelerating growth, that is the case to make that you might see, and then I have to reiterate this, that you might see an intraday spike here in Euro USD after the CPI reading on Wednesday, but that's something we will engage with on that date. In the meantime, I'm very interested to see what US yields are doing, and they're continuously pushing higher as they have not found the ceiling yet, and that usually means for all the other yen pairs, and specifically right now USDJPY, it will be moving higher as well. Again, it's a mix of things that's pushing USDJPY higher. Bank of Japan and Federal Reserve divergence. On the other hand, you have swap market and tighter liquidity for USD. So it's a carry trade right now here, USDJPY long. You're getting paid basically to hold that position. And you also have yields going higher. And overall, that's really benefiting USD more than JPY. Hence, there's no top in sight just yet, and expect this just to drag on further on. So that's a direction we'll be trading next week. In terms of trigger points next week, there's not a lot to work with. Monday, pretty much barren. On Tuesday, we have 10-year bond auction in Japan. So I'm expecting a little bit of a touchback from the 0.25 level we see now in the JGB levels, which tends to be negative for yen and positive for all the other yen pairs. So it's something to keep an eye on that today. So right now, again, you can see here there's a yield curve control getting a hold by Bank of Japan. They're not allowing these yields to go any higher. I mean, I think there was a bit of a maybe supply concession. That's why we saw yields come higher. But I'm expecting this to come down, yen to come down. That will mean EURUSD, USDJPY could possibly benefit next week quite well. Apart from that, German ZEW sentiment report, not a lot I can work with at this point. Some Fed speakers, and then the all-important CPI, which is the most important data point for next week. As you know, mostly or not, I trade this data usually with a London fix. After that, we tend to get some nice swing trades following the CPI read. That's something we focus on instead of just trading in the chop and figure out where the breakout's going to happen. I like to more focus on the time where the volatility lets loose a little bit and can allow my trades to run as well. Moving on Thursday, we have the PPI, which is equally important. And we get the prelim GDP numbers for the UK. So you should see some action on the pound on Thursday and a lot of trades to come post CPI. So definitely will be very busy trading on Thursday. And on Friday, again, there's not a lot of data I'll be working with. So it really comes down to just gauging sentiment, what the S&P 500 does. If the VIX starts topping out at these 30 levels, it has not managed to push through for quite some time. So if these levels hold in the VIX and starts coming down, that will be certainly negative for the yen, positive for indices, and we have certainly some trades to work with for next week. But big picture, you have the idea what dollar is doing here, why it's getting stronger, and it's no point to really start fading it just yet. That's all I wanted to cover this week, a bit of a shorter video. There's not a lot of moving parts. We are in this May period where market is mostly moving back to cash until they want to deploy it again during the summer period and hold on. But it's more of a wait and see and just a couple of trades. See if you can grab 20, 30 pips here and there on an intraday basis. You are doing extremely well. I bid you all a really good weekend. I will catch you all next week again. I wish you a very successful trading week. Thanks, everybody, and bye.